Meet Harry, the aspiring young trader with big dreams and an even bigger appetite for success. He envisioned a future where he makes the right trades, picks the right investments, and swims in a sea of money. In this future, he would buy the Rolls-Royce, buy his dream house at that exotic location, and accrue so much wealth that his children's children would never know what it is to lack anything. However, Harry's journey in the world of trading turned out to be far more challenging than he had anticipated. In 2020, he discovered the promising world of cryptocurrency, where technology was turning ordinary Joes into millionaires overnight. And if he was honest with himself, the tech wasn't really his interest. It was all about the money. So, he immersed himself in what he thought were market fundamentals, trends, charts, and learned about various trading strategies. But despite his efforts, his trades seemed to consistently go awry. It was one step forward and two steps back. Day after day, Harry struggled to understand the intricacies of the market. He would often succumb to his emotions, letting fear and greed guide his decisions. He would impulsively enter and exit positions based on hunches. His profits would soar to the moon one day, only to come crashing down like a meteor the next, which would often result in significant losses. As this was happening over and over again, doubt began to creep into his mind, and his confidence plummeted. With mounting losses, Harry found himself in a cycle of despair. He questioned his abilities, wondering if he was cut out for the trading world. And to make matters worse, he ended up blowing his trading bank. Harry was told that he needed to find something else to do with his life by those around him. He contemplated giving up and pursuing a different career path. However, deep down, a flicker of determination remained, urging him to persist. So, Harry ventured into the world of Forex trading. Assuming that the market would be less volatile than the crypto market, he funded his account again, and very soon, his old friends, fear and greed, came back rearing their ugly heads. And very soon, he blew his trading account again. One day, in his despair, while meandering about on the internet, searching desperately for how to become a successful trader, Harry stumbled upon the psychological aspect of trading. And as a result, he went on a thorough exploration of the psychological dimensions of trading. He was intrigued because he found that he already knew all the things he needed to be a successful trader, and the only thing holding him back was his inner demons. He found that if he learned emotional discipline in trading, risk management, and develop a resilient mindset, he would become the successful trader he knew he could become all along. Inspired, Harry decided to embark on a journey of self-improvement, fund his trading account once again, and give it one more go. He began implementing the practical trading psychology techniques he'd learned. Techniques like strict risk management rules, defining his entry and exit strategies beforehand, detaching his emotions from his trades, and treating each decision as a calculated business move rather than an impulsive gamble. And as time went on, Harry's newfound discipline and knowledge started yielding positive results. He began to see a gradual improvement in his trading performance. Small wins became more frequent, and his losses were kept in check. With each successful trade, his confidence grew, and he started to believe in his abilities once again. Months turned into years, and Harry's persistence and dedication paid off. He developed a keen understanding of the market and honed his trading skills. He was transformed from a struggling trader to a seasoned professional who's consistently generating profits and building a reputation for his astute decision-making. How can a simple mental shift help him turn his initial struggles into a stepping stone toward a rewarding and fulfilling career as a trader? Before I continue, I would like to let you know that I am Harry. And if you're struggling with turning a profit with your trading, I want you to know that you can change your trading story, just as I changed mine. Many aspiring traders make the common mistake of focusing primarily on studying market behavior rather than understanding their own mindset and personal attributes and the reality of the market. In this video, I will share with you the 5 important things you should know about the psychological aspect of trading that I can guarantee you has been stopping you from becoming a profitable trader. I will share with you the reality of the market, what I've learned over the years on how to develop an ironclad trading psychology, and how this ultimately transformed my trading mindset and made me a better trader. Number 1. The answer is not in strategy. When I began trading, I kept searching for the next great strategy that claimed to have the highest chance of winning. As you probably know, there are numerous videos on YouTube offering such strategies. However, most of them didn't work for me. Don't misunderstand. Some of them were genuinely effective trading methods. What I didn't realize back then was that even if a strategy is good, it doesn't mean it will always result in consistent winning trades. To be successful with trading, you have to understand that having a good trading strategy doesn't mean you will win every time. What a good strategy gives you is a better chance of winning in the game of trading over the long term. This advantage comes from understanding the market, price action, using fundamentals to your advantage, and using tools like technical indicators. It's crucial to know that even with a good strategy, you can still make mistakes and lose some trades. However, if you have mastered your setup, back test and forward test before risking real capital and stick to it over the long haul, you will be successful. The secret is in having enough sample size. This mindset helps traders set realistic expectations, handle the ups and downs, and make smart decisions based on their advantage. Remember, the goal isn't to win every trade, but to profit over the long run. Number 2. Risk management. If you have been trading for some time, you would have experienced periods when your trades win almost all the time. Then one day, it stops, and in most cases, you blow that account. The problem here is that most beginner traders don't understand the concept of risk management. People often talk a lot about things like indicators and analysis to make smart trades. While these are important, the most crucial thing that decides if you do well or not in the long term is risk management. It's like the main piece of the puzzle for a successful trading career. So, what exactly is risk management? Risk management is like wearing a seatbelt while driving. Just as a seatbelt reduces the impact of an accident, proper risk management minimizes potential losses in trading and investing. As a Forex trader, imagine you invest $1,000 in a currency pair. Applying risk management, you might set a stop-loss order at 2% below your entry point. This means that if the trade goes against you, you won't lose more than $20, which is just 2% of $1,000. Imagine losing just $20 out of $1,000. You're still good, right? This disciplined approach safeguards capital and allows traders to make decisions based on probabilities and risk-reward ratios, reducing the likelihood of blowing an entire account during periods of market fluctuations. Understanding and implementing effective risk management is key for long-term success in trading. Number 3. The market operates on its own terms. This market reality emphasizes the idea that traders don't have control over market movements, and it should serve as a reminder that despite our predictions or preferences, the market operates independently. Imagine you're in a boat on a river. You can paddle and steer, but you can't control the current or the weather. Similarly, in trading, you can make informed decisions based on analysis and strategy, but the market itself is influenced by countless factors like economic news, global events, and the actions of other traders. For example, let's say you analyze a stock and believe it will go up. You buy shares with the expectation of making a profit. However, if unexpected negative news hits the market, the stock may go down instead. The market does what it wants, and external factors can override your predictions. Accepting this reality is crucial for traders. It encourages humility and flexibility. Instead of trying to control the market, successful traders adapt to its movements. They use risk management strategies, diversify their investments, and remain prepared for unexpected changes. Always remember that the market has a mind of its own, and success often comes from understanding and working with its inherent unpredictability. Number 4. Eliminate the distractions. Imagine you're trying to learn a new skill, like playing a musical instrument. There are countless tutorials and opinions online about the best way to master it. However, what works for a famous musician might not suit your learning style. Similarly, in trading, finding your own path is crucial. Think of the trading world as a diverse marketplace of ideas. Each trader approaches it differently, bringing their unique strategies and perspectives. What might work for someone claiming to be a market guru online might not be the right fit for you. The key is to develop your own approach, one that aligns with your personality and trading style. So, cut out the noise and focus on what resonates with your instincts and aligns with your personal approach to the market. It's about building confidence in your unique strategy rather than getting swayed by every piece of advice claiming to hold the ultimate solution. By doing so, you'll be better equipped to navigate the complexities of trading and stay true to your own trading journey. Number 5. You need a trading plan at all times. Successful traders consistently abide by a well-thought-out trading plan that dictates both entry and exit strategies. Before entering a trade, a comprehensive plan is established to outline the conditions that warrant entry into a position, as well as the exit strategy. Imagine you're planning a road trip. Before hitting the road, you decide on a route based on road conditions, weather forecasts, and scenic spots. This is your entry plan. You also set specific checkpoints for rest breaks and decide where you'll spend the night, which is your exit plan. Now think of your trades as the journey. Before entering a trade, you must have a clear plan. Let's say, buying a stock when it reaches a certain price. However, just like road conditions can change, so can the market. If the stock doesn't perform as expected, you need a plan for when to exit. Your exit plan might be deciding to sell if the stock drops to a certain level to limit losses or selling when it reaches a target price to secure profits. This way, you're not driving aimlessly. You have a roadmap guiding your actions. Some traders only focus on when to start, like starting a trip, but not knowing when to stop. This can be risky. If there's no plan for when to finish, traders might make emotional decisions, hoping the market will do what they want. But markets can be surprising, and relying only on feelings can lead to big losses. In essence, having a trading plan is like having a roadmap for your trades. It helps you navigate the market with a clear direction, making decisions based on your predetermined strategy rather than relying on guesswork. In conclusion, understanding and mastering these concepts is key to becoming a successful trader, and by internalizing them, you'll develop a clearer and more objective mindset, one that will enhance your ability to navigate the market successfully over the long term. If you're further interested in learning the intricacies and the practical tips you can execute to improve your trading psychology, check out this video up here, where I explain how to improve your trading psychology using 5 simple practical tips. If you made it to the end of this video, I appreciate you. And if you found this video helpful at all, please destroy that like button. Subscribe to the channel and turn on the notification bell so you don't miss it when I drop videos like this in the future. Thanks for watching.